Welcome back, everybody, to another episode from Coin and Capital, where we bring you guys macro, crypto, financial news. We break it down and we deliver the truth behind the headline. For those of you just tuning in, my name is Chris, and I've been studying financial markets for the last 5 years. Traded and invested through the COVID-19 pandemic, and now sitting here breaking down this week's topics of China, yet again disrupting critical mineral supply chains in the US, how that affects the markets, and what we can expect in the weeks to come. So let's get into it. So to catch you guys up, if you guys haven't been following the trade war series, basically Trump and China have been going back and forth. Yet again, this is nothing new. However, this time is getting a little serious. China is pulling some big cards out of their sleeve, and they are hitting the US with left hook, right hook, uppercut combos that they cannot block. Off the rip, Goldman Sachs flags risk of disruption in supply of rare earths key minerals. That's from Reuters. About when was that posted? October 21st. October 21st, guys. We're the 23rd today, so 2 days ago. 2 days ago, and then to the right, we have some United States-based rare earth company. I totally forget the ticker. Should have left it visible. However, what we can see after the yellow line is when all of this news, talks, scares, and blows were dealt within this trade war, right? Trump 100% tariff that. China export controls this, right? The market does not like it, especially U.S. rare earths. They hate it. Next on the list, from The View, the U.S. is paying the price for complacency with China. Time is running out. ... What do they mean by this? So, over the last 40 years, the U.S. has continually, because of its world reserve currency status, exported dollars while simultaneously hollowing out its manufacturing base and letting that manufacturing base settle in China. So while the US was exporting dollars, China was importing all of this manufacturing capacity that the States was giving up. And those 40 years of industrialization in China has given them literally game-winning leverage. Basically, after Trump went and imposed his 100% tariffs, or flexed his ability to impose those tariffs on China, the US also coerced Europe. I forget which legislation it was, but somewhere in Europe, this regulating body seized control of a Chinese chip making, or they messed with it. And not 5 hours later did China come out with their export control flex on these rare earths, which everyone in the world relies on, and which China controls majority share in production and refinement. And literally right after China came out to say that, the European auto industry crumbled. Literally crumbled. Here we have from the Yahoo Finance, it was the European Automotive Index, and got absolutely nuked. Why? Because even though these cars are manufactured majority in EU, the chips inside the cars that make all of these electronics go are from China. So China literally came to the US, said, we caught you trying to mess with us. Here's what we could do to literally one of the biggest industries in Europe. So now that the US is scrambling and pushing for all of this reindustrialization and reshoring manufacturing, they need to get their monetary policy in check in order to do so, right? Reshoring is going to cost a lot of money, and financing at 4% rates is tough. So this in from Reuters again, Fed's Powell says the end of balance sheet drawdown process may be nearing. Our boy Jay Powell is ready to end QT, which means in the future, in the coming months, the Federal Reserve may, or at least has the capacity to re-engage in subsidizing all of this financing that the US is going to need to do. Meanwhile, in the US's attempt to diverge away from China's control over rare earths, Debasement Inc.'s economic stabilization deal with Argentina. So in the last videos, we've talked about the swap line going out from the US's Treasury to Argentina. Let's think about that. Why would the US want pesos? Why would they want another piece of crap fiat currency that has been abused and devalued to literally nothing? They could care less about the fiat. They want the minerals. I guarantee you they want the minerals. All right. How could they not? How could they not? China has to buy the balls, and they need escape plans pronto. So, how does the US, apart from doing swap lines with over-devalued fiat nations, begin to reshore their manufacturing? Well, there was in fact articles from quoting Besson himself about implementing Operation Warp Speed like action to get this done. And here, this article, how to implement an Operation Warp Speed for rare earths. Guys, Operation Warp Speed was when they shuttled all of those health shots out and mainline them into people's bodies without their consent. You remember that? At the same time, the Fed's balance sheet exploded and they printed $6 trillion. That was Operation Warp Speed. So how much money are they going to need to print now to reshore all of this manufacturing in order to diverge away from China? Is it going to be 6 trillion? 8, 10, 12? Who knows? But it is in the cards, and I believe they are willing to tap every lever necessary to get this done. Because people, Pentagon, people high up in military are calling this national security emergency. Guys, the China chips, literally China is in all of the US weapons, right? And the US cannot produce, they can't produce anything. They cannot produce anything by themselves. It takes them like 10 years to do anything. Whereas in China, they crank it out in like a week. So they are willing to print the money to get this done. And in fact, they've been printing the money, right? The Treasury has gone and implemented buyback programs And then we've seen Jamie Dimon get tagged in now, pledging $1 trillion to go and spend into these CapEx projects. And here we have the United States ISM, so manufacturing index. And how we read this is above 50 is a flourishing, growing manufacturing base or economy, you could say. And what we see here is the last reading just had a pretty sharp uptick. And I think in the coming months, we should expect that to grow as the US continues to print this money and continues to direct this money into reshoring manufacturing, right, through whether it be policy or just direct investment. We'll have to see. But now the US is juggling this new paradigm, right? So they need to refinance the debt. That's ASAP, right? Major priority. The $7 trillion is a big problem. But now they also need to worry about manufacturing and reshoring. What are they going to do? Well, guys, they're going to keep rates negative. They're going to print the money. And we're going to go through times where like 3, 4, maybe even 5% inflation is the normal. So what do we do if we want to protect our currency, our purchasing power, our time and energy? You go buy some gold and you go buy some Bitcoin because they function best. They appreciate the best in regimes where inflation is high and investors can no longer get real yield in sovereign debt. So if you guys enjoyed this video, make sure to drop a thumbs up, drop a comment down below, make sure to hit that subscribe button. Catch you guys in the next one.